Hello everyone, and welcome to another edition of the TradeStation Trading App Store Showcase. My name is Jesus Nava. I'm the Director of Client Training and Education here at TradeStation. It is a pleasure to host this event and present to you John Carter, who's a longtime friend of TradeStation. He's a trader, an educator, and author of the book Mastering the Trade. In today's presentation, John will demonstrate how his indicator called TTM Squeeze can help you recognize when the market is about to make a big move. But before we get started, here are some important disclosures. The following presentation is for educational purposes only. All symbols and trading ideas discussed are for demonstration only and are not recommendations. Active trading is not suitable for everyone. Please take some time and read the PDF handout, which I'm going to make available as a link in the chat area. There it is. All right, I'm going to turn over the microphone to our guest speaker, John Carter. John, it's all yours.
Okay, thank you, TradeStation, as always. It's always fun to be here and talk about my favorite platform. This is something I've been using for, 15 years now. Time flies when you're having fun. And it's really also been cool just kind of watching the new developments and the new technology that they've been using at TradeStation. And one of these has been the App Store. And what we found is that a lot of times, I've got indicators that I really like to use, and everybody has indicators that they really like to use, and sometimes there's never really been a good way to kind of try before you buy kind of a thing, and the whole thing with the App Store has been this fantastic way where you can actually try all these different indicators out and see if it's something that fits your own personality. So what I'm going to be talking about is my favorite indicator, which is called the squeeze. Okay, so let's dive in and just take a look at what that is. Now, of course, it's important to always have everybody realize that I am not a TradeStation employee. This is my own trading ideas. These are things that I've come up with on my own, and it's essentially trading in and of itself can, of course, be risky. You've got to use appropriate position sizes and all that kind of fun stuff. So let's talk about my favorite setups, and I talk about these at simpleroptions.com, where I focus on a lot of these setups myself. So what are our goals for this webinar? Well, I've found in trading now for over 20 years is that a trader essentially has one of two goals. They either have a small account that they want to turn into a big account, okay? And then at one point, and of course a big account is relative, right? For one person, $100,000 may be a big account, that's all they need, but another person may be like, no, it's more like $500,000 or $1 million. It's different for everybody. But at some point what I found is you start off with a small account and you grow it to a certain level, and at that point it's kind of like, you know what, I'm comfortable with this account size. Instead of trying to grow this account, I want to create an income off this account, okay? Because if you pick out like a $10,000 account, it's hard to create sustainable income off of it, like say to live on. But if you can grow a small account into a big account, then you can create a sustainable income off of it. So the indicator that I like to use is more for growing small accounts into big accounts, but of course you can also use it for income trading and stuff like that too. So let's dive in and talk about it. First, do I trade? Yes. This is actually where I'm standing right now. I've got my TradeStation screens and charts up. We're sitting here, I'm watching the markets. Today the markets are up really big, the yen's getting destroyed. This stuff fascinates me and I love it. I was a history major and an economics major in college, and I think the markets are one of the best ways to study what's really happening in the world. You can also follow me on Twitter. My handle is just John F. Carter, so that's pretty easy. I also love trading. I've got 3 young kids. They're 9, 7, and 4 now. My gosh, time flies. This is my youngest, and I walked away one day to go get like a cup of tea or a cup of coffee or something. I came back and he was trading. He actually executed a trade, made 10 ticks, and was good to go. So I'm sure he'll be doing fine. So what I found overall, and everybody, and it's important to find a rhythm, find a market, find a time frame that fits your personality, okay? And in my years of doing this, what I found, at least what fits my personality the best, is that I found a rhythm to the markets. And it doesn't really matter what time frame. It could be a weekly chart, it could be a 5-minute chart, but within that context or that time frame, there's typically small moments of explosions, okay, where you see like, wow, for the last 10 minutes, the stock has really moved higher, or for the last 10 minutes, the stock has really sold off. And then after that, they just kind of chop around for like 90% of the time. And what happens is during the chop phase is, a lot of times that's when traders are getting in. Of course, that's like too late. You missed the move, and that's why they call it chop, because traders get chopped up. And what you want to do is try to time those bursts, okay, those price bursts. And it's one of those things that it looks very easy to do in hindsight, okay? And I remember the first time I went to a class on trading, and the instructor got up at the front of the room, and he's a really good speaker, and he had a chart like this and said, well, here you can see there's like a double top, right here. And, here at the double top, that's where you would short. And then here, when you saw the triple bottom low, that's when you would cover. And I was kind of incredulous. I'm like, yeah, but how do you know that at this moment in time it's going to go down? I mean, what if it goes, it goes up? And he's like, no, it's a double top. 98% of the time that's going to fail and fail in a big way. And I just didn't believe him. I just was like, that looks great in hindsight, but what do you do? What do you do in real time? Okay, what do you do in real time when the rubber meets the road and all that kind of stuff, right? So that's the kind of stuff that I was interested in doing, or interested in looking at. So the idea with this then is I got obsessed with the idea of, is there a way to kind of gain an edge to get the heads up that a market's about to release that energy, okay? And after years and years of studying this, I did find a solution for that. And essentially, you can utilize the Bollinger Bands, okay, the Keltner channels, and a momentum oscillator to give you a good idea that a market's about to release energy, okay? So, and these are all indicators that are on your TradeStation platform. So, and I just use these at the default. So I don't do any changes or anything like that. I just go into my TradeStation, insert Bollinger Bands, insert Keltner channel. So the blue here is the Bollinger Bands. They are a volatility-based indicator. They expand and contract as market prices expand and contract. During bursts of these momentum, you're going to see that these Bollinger Bands, they expand, okay? And you can see how far they are out here. But during times where it's quiet, you can see that the Bollinger Bands here contract, okay? Now, what I'm looking for is that they only can contract so much before they actually have to essentially, pop back out again, okay? So what I'm looking for is the moment in time when the Bollinger Bands contract to the point where they're trading inside of the other indicator that's on this chart, which is the Keltner channels, okay? Bollinger Bands are in blue, Keltner channels in red. When the Bollinger Bands get to the point where they've contracted to the point where they're trading inside of the Keltner channels, that's when a stock cannot contain the energy that it's been building up, and it has to release that energy. And you can see here then once the Bollinger Bands turn back up and pop back out of the Keltner channels, price explodes in this case, okay? It's like, okay, well that's all well and good, but during that contraction phase, how do you know if during this contraction price is going to, once it's over, okay, is price going to explode to the upside, or is price going to fall to the downside? Okay, so how do you know that? Well, very simple. You're going to add a 12-period momentum oscillator. Now, this is a daily chart, but it doesn't matter. If you're a day trader, you want to do this on a 5-minute chart, that's fine. If you're a bigger swing trader, you want to do this on a weekly chart, that's fine too. But here, the moment in time when the Bollinger Bands are inside of the Keltner channels, which you can see is right here, okay? Right here they're clearly outside, right? What you're looking for are the times when they're inside. Look down at the momentum. If the momentum is below 0 and trending lower, the chances are like 90% that when this releases energy, it's going to be to the downside, okay? And vice versa. If during this time, during the squeeze, Bollinger Bands are inside of the Keltner channels, the momentum oscillator is trending higher, then you're looking for this to pop to the upside. So what's nice about this is that what most people do is they look around and say, wow, look at Goldman Sachs is moving today, I'm going to buy it. When they buy it, it does nothing, which can be frustrating. What you want to do instead is identify these moments in time when a market is quiet, when it's building up energy, and that's when you take up your position, okay? And then you're in it when it explodes, and that's what I call feeding the ducks, because you're going to reverse from being a trader that chases to being a trader that's already got the goods and is handing them off to somebody else who doesn't understand how the markets work, okay? And it's fantastic that way. So what we've done is I just found, and I used to look at these on the charts, I don't know about you guys, I found this kind of hard to find sometimes, meaning I really had to like squint and stare at the charts and say, okay, is that in or is it not in? And then sometimes the momentum oscillator here would not be very, it was just kind of clunky, and for lack of a better term. It's good, but it's clunky. So we did some changes. So the first thing was we just see these dots along the bottom. Well, anytime the Bollinger Bands are inside the Keltner channels, there's red dots. So that's easy. I can just look at a chart and say, are there red dots? Yes, that means the Bollinger Bands are inside the Keltner channels. The other thing is we took this and smoothed it out. Okay, we smoothed out the histogram. So instead of, or the momentum oscillator, so instead of this kind of weird clunky thing, you can see that there's a gradual ascension of momentum, okay, which is designated here by the, you can see the momentum coming higher, and it's just a lot cleaner. And so I found this just a lot easier to use. So now I can sit there and go, okay, Goldman Sachs is in a squeeze, momentum is going higher into the squeeze, and now I can see that it's above zero, right, boom, I'm going to buy Goldman Sachs stock, and then here we go. So how long do you hold on to it? Generally for a stop loss, I'm going to use one average true range. So the average true range, that's another TradeStation indicator, 14 periods. It'll show you like the average range over the last 14 periods was $2. Well, great. You want to have a stop of at least $2 or you're going to get stopped out, okay? And then if we go up one average true range, like $2 or whatever it is, it's going to be different for every stock. I'll take off like a third of my position and trail at my stop. And if we go up two average true ranges, I'll take off another third of my position, trail at my stop. And then from there, I'm just going to hold on to the rest until the squeeze loses momentum. Okay, so you can see here, boom, we've popped up, but once it loses momentum, there's no need to be in the trade anymore. Now, in this case, the stock actually continued going higher. That doesn't matter. I'm interested in playing this little spurt here. Sometimes after that, it'll come all the way back down. It doesn't. This is not a setup that I do. So what I found with this is that the average squeeze signal lasts 8 to 10 bars. So if you're in a daily chart, just think that this is a trade that could last 8 to 10 days. If you're in a 5-minute chart, that's 8 to 10 5-minute bars, so that's like 35 minutes. Okay, so it's, so you can time it like that. If you're doing this off of a weekly chart, 8 to 10 weeks, a monthly chart, 8 to 10 months. So it's very versatile. Okay, so here we go. There's the dot. You can see momentum's higher. There's the, there's the histogram. Scale out and stay in the trade until it loses momentum. Once it loses momentum like that, you're done. Okay, move on to the next setup. Another example here. Now I've stripped out the Bollinger Bands, and you can see how easy this is to see. It's like, wow, there's the red dots. Histogram's going higher. I'm going to buy it. Boom, done. All right, so it's very, very clean, very, very simple. And then, there's other indicators that you can also use to kind of help manage this. This is one called the TTM trend, which I like. A lot of times, sometimes I used to like watch candlesticks a lot, and I still do. I like them, but I'd see something like this and go, oh my gosh, bearish engulfing. I'm getting out of this trade, and it would go higher. But what the trend does is it actually looks back and keeps you in a trade. So it's not just this one bar. It's also looking back to the prior 5 or 6 bars and saying, no, you know what? In this case, bulls are still in control, so I'm going to keep the bars blue for you so you don't get shaken out. Only when you see that they're red, you'll see that sellers are now back in control. Okay, so I find that that's helpful. So here's a quick recap on that TTM trend. It's superior to single bar analysis. It refers back to the prior 6 bars to collect extended data on order flow. The blue bars indicate sustained buying pressure, and the red bars indicate sustained selling pressure. Okay, so they're very, very nice, very easy to use. Okay, so now if you guys remember at the beginning of this presentation, I showed a chart that just had green bars on it and nothing else, and how I was talking about the instructor that was kind of like, of course you would short here and cover here, which I didn't believe him on that because there's no way he could know that in advance, and it drove me to want to know how to do this in advance. So now you can see I'm not looking for necessarily a double top. What I'm looking for are there red dots for a squeeze, and I can look down here and say, wow, yes, look at the red dots right there. Okay, that's fantastic. So then I can go, all right, there's red dots. The histogram's below 0. I'm going to short. Okay, now I'm in it. I don't know where it's going to go, and that's the thing is you don't have any idea where it's going to go. But when it starts to lose momentum, or when the trend starts turning blue, you know not to be in that trade anymore. Okay, so you can scale out. You can take off some here. You can take off some here. But when it gets to like, you can see the loss of momentum here, and these bars have turned blue. At that point, you're done. There is no way you should be in this trade at all. So the challenge here is, one, don't fall for the trick of newbie traders and take a small profit. Okay, oh, I got 2 ticks or I got $1, I'm out of here. No, stay in the trade as long as it's working. Okay, and this is a very easy way for you to do that. But then when it's no longer valid, get out. And what happens is a lot of people get so excited that then they're still, in this case, short here, and then they start to panic and they end up getting out for a loss. Okay, at this point, there is no reason to be in the trade at that point. Okay, so the other tool that I like on this is, you can see here, this is an added pool thing here, is that I like to add what's called a C wave. And if the C wave is below 0, when the squeeze is forming, guess what? The chances are like 90% that it's going to go lower, which is pretty awesome. So that was a tool that I added later that I found to be very, very useful. And in fact, one thing in TradeStation you can do is you can even hide the price, because a lot of times people get messed up if they're just looking at the price and they get so caught up that it's like, oh my gosh, it's kind of staring at the P&L. If you just take the signal, like, oh, there's a squeeze, C wave's below 0, I'm shorting, and you short it, and then when you start seeing this, you just get out. A lot of times that actually improves a trader's performance because you're just trading the setup itself instead of doing the looking at the price and staring at the chart and all that kind of fun stuff. Okay, and if you want to do that, all you want to do is you can move this on the TTM squeeze. You can just move it. You can see there it's on subgraph 1. And then you can come over here to the bars and just make them black, the same color as the background, so you can't even see the price. And so you can actually go in there and do that, which is nice. Okay. Now, a question I get a lot is, does this work on all markets? And the answer is yes. Here's the euro. This is an hourly chart of the euro, right? And here you can see the C wave is above 0, B wave is above 0. There's a squeeze. Guess what? 90% chance that that is going higher. Okay. And again, it just kind of helps keep you on the right side of the market there. Here's Baidu, stock that I love to trade on a 45-minute chart. So, we have C wave above 0, B wave above 0, A wave above 0, there's a squeeze. Guess what this thing's going to do? It's going to go higher. But you're not buying it here, you're buying it here before it takes off, okay, which is super helpful. What the other cool thing about this is you can even dump it into radar screen. There's tools you can sit there and say, okay, great, there's a squeeze. Here's a squeeze, and the A, B, and C waves are above 0, so I'm going to buy that because that's a no-brainer. So suddenly, it starts making your trading day very streamlined, okay? And really, that's what trading is about. It's about patience, waiting for those good setups, waiting for those setups where it all comes together, and avoiding the urge to do impulse trades, okay? And that's one of the biggest questions I get is, John, how can I become more disciplined? And it's very simple. First, you need to have a setup that actually helps you with your discipline, and that's what this does. And then secondly, you need to work on it on each and every trade. And I know that sounds kind of maybe repetitive, but the best traders work on their discipline, they work on their trading skills on each and every trade, all right? Okay, so the thing here that I found is also very powerful if you get into multiple time frames. So if you're like to trade on the hourly chart, that's great. But if you're taking, like, say, a long on Apple on an hourly chart, you got to squeeze, make sure that the weekly chart is also bullish. So I'll look over here and say, here's an hourly squeeze, but yeah, man, boy, the Apple is just rocking and rolling on the weekly chart. So of course, the chances that this hourly chart is going to explode higher is great. And that's a super easy way to do it, okay? And I have this sign in my office. It's just called the rules. They may be stupid, arbitrary, and irritating, but God help you if you break them. And that is so, so, so true in the world of trading. Have your setup, have your rules, and follow them, and you can do this for a living. If you can't, you're always going to be struggling. Okay, so I'll show you a couple of other strategies here that I like to use. One of my favorite trade setups, this is on an hourly chart, and I like to do this on a stock. You can either trade the stock itself, or you can use options on the stock, et cetera, et cetera. So here's an hourly squeeze. I see that the C wave is above 0. And remember, what the waves do, the C wave is telling you that the long-term trend on the hourly chart of Goldman Sachs is higher. The B wave is telling you so is the intermediate term trend, and the A wave is telling you so is the short-term trend. If you've got the short-term, intermediate term, and the long-term trend all pointing the same way, and then you've got a squeeze developing, guess what's going to happen? Price is going to go higher 90% of the time. Okay, so when I see this setup, then you can buy the stock itself. That's great. Just buy the stock and then sell the stock when the signal is over. If you like to trade options, you could buy call options. You could also sell a put credit spread, et cetera, et cetera. The point is the signal, and depending on what tools that you like to use, you can trade around that signal. On that particular example too, I always like to check, let's look at the daily chart. Wow, the waves are all above zero and there's an uptrend. Now there's not a squeeze on here, that's fine. The squeeze signal we're playing is on the hourly chart, but you can clearly see here that the trend is higher. And as a bonus, on the weekly chart, you can see that the trend is also higher. Okay, so very, very clean, very easy to do. All right. And again, a lot of different ways to do it. If you just want to buy the stock, you could buy call options, you could sell put spreads. There's, the more you know about, of course, especially with options, and if you've got a directional bias, there's a ton of things that you can do. And I always remember going to options courses, and they'd always say, well, if you think it's going to do this, you can do this, and if you think it's going to go, the other way, you can do this. I'm like, how about giving us some probabilities of it going one way or the other? And they could never do that. And that's what I love about this, is it gives you a high probability, in this case Goldman Sachs going higher, so you can actually then construct whatever option trade that you like based on it going higher. Okay, for stops and targets, and I was talking about this earlier, I'm very much into average true range. Average true range is put that on the daily chart, and you can utilize that as your stop loss and your initial targets. Here's another one too that I like. This is a win. Here's an hourly squeeze that's setting up. While a squeeze on the daily chart is fired, that is super, super, super powerful. And anytime I see like a daily squeeze that's fired, I know that's in a strong uptrend. The hourly chart is just telling you, hey, this is pausing in the midst of a strong uptrend. That's a fantastic time to get in. That's a deadly combination, okay? And the other thing you can do too is if you get a squeeze, like this is on Google, and you get a squeeze and you prefer to sell premium, and the squeeze signals to the upside, a lot of times people like to do iron condors. What I do is that if there is a squeeze to the upside, and I know that there's the probability of 90% going higher, I'll just sell the put spreads and not do the iron condor. And that way you don't have one of those wings giving you some issues, okay? Okay, so how do you find this stuff? That's the next question. And what's really great, again, about the TradeStation platform, they've done a really, really, really good job. So I tip my hats off to their technology team in integrating the trading app store within the platform. So all you have to do is open up your TradeStation platform, and you'll see right over here, there's a little tab, and it'll say Trade Apps. Then what you'll see is that it'll open up, and you're going to see the link right here, and it says Trading App Store. Okay, and of course you can do charts and stuff like that. In this case, you want to open up the Trading App Store. Once you're in the Trading App Store, you're going to enter the term TTM squeeze at the top of the page. Okay, so you can see right here, just type in TTM squeeze, and then when you do that, it's going to bring you up to this page. Now, from here, you can see, and this is the key with this, because I've never seen anyone be able to do this before. Before, if you saw a piece of software and if you liked it, because the nature of software is once you own it, you can't send it back because you've already got it. So it's typically all or nothing deal. I mean, you can't get a refund or anything. Well, what's cool about this is that you can actually try it for free for 10 days. Which, again, I've never seen that before, which is great. So now you can say, okay, John, I saw what you're talking about, the squeeze and the waves and stuff like that too. So I want to try it and I think that's important from a trading perspective to be able to try it before you buy it. See if it works. See if it works for you. See if it's something that fits in your trading plan, your personality. Okay, and then once you do that, you'll click on that, and then you just come over here and you just put in your username and password for TradeStation. Then it's going to know who you are, and it's going to authorize your account so that you can use it. Okay, super handy feature. And then you'll just want to agree to the terms and the conditions and start the trial. And then you are good to go, okay, which is fantastic. After clicking Start Trial, the download will initiate, and you'll be directed to this screen, okay, and then you'll want to note that the indicator at this point will then download the next time you log in, okay? So that's a really, really cool tool that way. And then after the download completes, you'll be prompted with a message similar to this one below. And note that you might be required to update your platform as well. In this case, you can see, okay, it requires an updated TradeStation patch. Okay, so if you've got more information, you can go to this link which is https://tradestation.tradingappstore.com/products/TTM squeeze. If you also have any questions for me or our office, you can reach us. We're in Austin, Texas, 512-266-8659, or you can also email us at support@simpleroptions.com. Okay? I hope you enjoyed this presentation of the squeeze. I hope it's something that you'll find that can help you in your own trading, and that regardless of whether you want to try the squeeze or anything else, dive into that trading app store and start utilizing the cool tools that TradeStation has put there for all of us traders. You guys have a good trading day, and we'll see you at the next webinar.